Hey, welcome Forex Fortune Hunters. Tom Wilmot. In this video, we're going to continue our series on the Metatrader trading platform for currencies. And in this video, I'm going to introduce to you a new template that was first discussed in my book 2 years ago called Forex Power Surge that was published on Kindle, and it's still there if you need a copy. In that book, we had 20 different templates that you could experiment with for great entries and trading with the trend. So today what we're going to do is really focus in on Super GMMA. That's a multiple moving average template, and for some of you it may be too noisy, but it has given me over the last 2 months, with a few modifications, some of the best entries I've had in the last 8 years. So if you're interested, hold on to your hat. We'll get started right after this. Okay, friends, in this video, we're going to do a couple or three things. First of all, I'd like to introduce you to a new template for the video series called Super GMMA. And that's because it's derived, as I mentioned in the intro, from multiple moving averages and a couple of other favorite indicators that you can use. And all through my career doing these videos, I've tried to mix and match various of our favorite indicators so that you could find a pattern or a template that really made sense to you. And or you could switch from one to another if you get bored to death. As sometimes you do when you're spending a lot of time in front of the screen, and you can just see what different templates offer in terms of places for great entries. So that's the first thing we're going to do, is talk about Super GMMA. And Super GMMA was first discussed in the book Forex Power Surge, which I wrote in 2019, I believe, and it's been out a couple of years on Kindle, and it followed up on the amazing Zealander Flytrap Forex trading system that we wrote back in 2015 and published in 2016, and that had the Zealander signal line in it, for those of you who've watched previous videos. The second thing I would like to do today is to share with you a trick that we have for changing the look of a template when you change time frames. This may not be as a well-known an ability as for beginning MetaTrader folks as for experienced ones, but we want to review that quickly, and that's what we will do. And then finally, third, I want to show you what I think are some of the best entry ideas that we can use with this template, and how we can achieve the goal of every one of our videos, and that is minimizing our risk and maximizing our potential for a reward. Where do we get in? And how much risk do we have to accept when we enter the trade? So those are the things that we need to do today, and so let's get started. Okay, Super GMMA includes, first of all, on this 30-minute chart, the 12 EMA and the 6 EMA. And you can see here we've used another of our indicators, which is available in my Dropbox file. And by the way, you can go down to the links below this video in the description and shoot me an email if you do not have access to the Dropbox indicators and templates. And just shoot me an email and I will send you an invitation, and we don't spam people, and there's no obligation or charge, so feel free. This particular template here has the Wilmot Cross indicator, which we did way back in 2010, I believe, and that creates this medallion, a blue one, when the moving averages cross over to the downside, and then when they reverse and cross over to the upside, it prints a white medallion. You can see it occurred here, and it occurred back here, and so forth. So in this particular case, we had a quick crossover, and then we had a move down, and then back and forth we went. So we had a lot of volatility on that particular day. So now down over in this area, and by the way, this is Tuesday. This is the chart of Tuesday, which was yesterday. Yesterday was the 14th of September, 2021, and this particular fundamental announcement of the U.S. Consumer Price Index which was lighter than expected, is the reason for this big bar up. And then, of course, we had a big reversal afterwards, and the market fell right off, and the pound fell away, despite the fact that people were thinking, hey, maybe the Fed isn't going to have to tighten as quickly as they have threatened to do with taper and so forth. So, in any event, you can see that on this particular chart, the 30-minute chart, or even an hour-long chart if you like, this move here is the same thing in an hour-long chart, but let's go back to the 30. This particular indicator is going to help you understand whether you're in an uptrend or potentially in a downtrend. And so as a result of that also, we look to our RSI. Let me open this up so you can see it clearly. Notice that when we come down into the bands, which are the 45 and 55 on this particular indicator, we would be in a position to see this crossover up here, helping us to see that this was the first move forward, then a pullback, and still right before that announcement, right before that fundamental announcement, people preparing for the worst here, obviously, and then getting good news. The situation here is that we quickly held above the 45 and so forth. Notice here, we did not hold above the 45, and at that point, we really had a continuing drop through the balance of the day. Now, that's the 30-minute chart once again, and down here we have the MACD in a particular colored one I found on the internet years ago. And notice here, when we are above the zero line on this indicator, with the histogram bars as the way of representing the MACD data, we have a pullback here, and then we have our white bar that indicates strengthening commitment to the uptrend. And you can see that when we move our line right here, I'll have to do it again, sorry. When we move our line right here, there's the last orange bar, and now we've moved up into space, and we have this move here, which was good for 28 pips off of that signal right there. Now, this is a lagging indicator because I've kept it at a 12-24 crossover. So as a result of that, this is waiting a longer time than the 6 and the 12 EMA on the template. And I will post this template on Dropbox later today. But for those of you who are newer, remember that this is an area where you may be wanting to accumulate. And then this is a confirmation that you're off to the races. So once you see this particular uptick and a close above the 6, even before we get our first white bar, these are confirming signals for one another. So this basically is a continuation signal, and it continues, you can see here, until we begin to pull back. And then we have a pullback again, an opportunity maybe to accumulate, although in front of a fundamental announcement, you may choose to keep your powder dry. Anyway, and then we're off to the races for a 30-minute chart. Well, some would say, well, what am I going to do? Maybe I'd like to try to get that, but it's too late after a 30-minute candle. How can I possibly do any kind of trade that way if I'd like to participate in the fundamental announcement? Well, there are a couple of ways, and obviously one of them is dropping down to a lower time frame chart. But let's stop that for a second and see what happened later and find out what kind of additional signal you might wish to have. We have this as our follow down. Once again, we came up, we came down, and once again we see our change over here indicates that maybe we're ready for a downward leg of the move. Here's what happens oftentimes after you have one of these crossovers. You get a pullback into the bands. On this 30-minute chart, you can see here we are, pull back into the bands, and then this particular white candle indicates a rejection of the upward trend, a continuation of the downward bars, and then over in this area here, we see our first red bar is this continuation to the downside. And once again, this is a little slower. This MACD indicator is a little slower. If we move our other one up, we come up into the bands and then we come down. So these are sort of trailing. This rejection right here is your indication that you could get into the trade. And I often forget to talk about stop losses, but I would put my stop loss in that case right here. After you've had a rejection I would not want to get anything going against me more than this particular stop loss level here. But on the 30-minute chart, that's as many as 17 pips. Now, that's a little rich for a lot of people's blood. So what could we maybe do to increase the probability of taking advantage of these moves, but rely on lower risk for this trade? So let me change the charts around just a little bit, and I'll be right back. Okay, guys, I have changed the charts and put the real Super Gamma on the wall here for your consideration. This is still the 30-minute chart of the pound and the U.S., as I said back on Tuesday, and Tuesday was the 14th of September, 2021. Now, before we get into a discussion of how we're going to change things in the lower time frame, let me start out by describing to you what we have here. In addition, I'm going to open it up a little bit further. In addition to our 6 and 12 EMAs, which you saw before, and the pullback into the bands, the push forward here, and then the big bar to the north at the time of the fundamental announcement at 8:30 U.S. East Coast time, I've added additional multiple moving averages. And by the way, the G in GMMA stands for Guppy, and Daryl Guppy is the Australian technical analyst who created the multiple moving averages more than 15, 20 years ago, and is credited with a lot of the work that I've been involved with since then. In any event, I started out here with the 25, and I went to the 50, which is the little gray line that you see here, perhaps. But in any event, you can see that this creates kind of a cushion below the faster triggering moving averages here. And in addition to that, I have added the Ichimoku cloud, and I have not included the multiple, the crossover averages that they have in their system. I just have the cloud in place. And once again, if you're above the cloud, it's a support system. And if you are, say, back over here, you can see that it is resistance, potential resistance. Here we moved higher, and it wasn't until we'd been able to cross over on our multiple moving averages, the big ones, that we had some kind of a move to the north. And it is at this point when the big multiple moving averages move through the cloud and out, and you're also stacked higher on the 6 and 12, that we really have a wonderful buy zone building up. And I could put a line right here to show you from this point on, you have the buy zone in place. And then over here, you can see as you're coming down through, this is a place where there's continued thought of a move to the south. Now, when I was experimenting with these three together, obviously I had some concerns about the fact that the longer time frames, the 30-minute that you see here, was really not turning things over quickly enough. While the system seemed appropriate, the fact that it was on a longer time frame really didn't give you much chance to react or get your trades in on time. So what I did, as I mentioned, the second thing I'd like to share with you is how we can change an indicator so that we only see it in certain time frames. Now, what I mean by that is we'd like to see the multiple moving averages. And by the way, the twist of that set of multiple moving averages, the 25 to the 50, is indicated by another color of our medallions. The same thing would be true here, is the fact that it's twisted to the upside, for example. And so it's possible that you could do a few things. I deliberated. We could simply get rid of the Ichimoku cloud if we wanted to do that. We could use only the multiple moving averages here. But notice that this big move to the downside and the pullback, we hadn't really twisted down yet here until at this point on the longer time frame. So we would have missed the potential trade from this failure of the crossover that we shared in the first part of this video. This is that position that we were in before. So let me show you what I've done as a compromise on all of this. First of all, you can see that we're moving into the bands here, and we want to put our vertical line here on this particular candle, which is the beginning of the candle that showed that rejection. And then we want to begin to drop down. Okay, now here's one way to see it. There's that on the 15-minute chart, and you can see already we have our twist down is quicker and better. And so now let's go down to the 5-minute chart and see what else we've got. And notice right here, the 5-minute chart had come down, it already crossed over. We're now below our Ichimoku cloud, and also now we're waiting for that little pullback. You can see here the great signal, the up medallion followed by the down medallion, and now we're in a situation where we can take that trade without having to wait for the on a longer time frame chart for the big moving averages to roll over, and or for the changeover in the Ichimoku cloud. Now notice also here that the cloud lines are switching position too at exactly the same time. As I mentioned, the 1224 is a little delayed because it's the 1224, not the 612, but still in all, we're accumulating here potentially for the downside run. And then when we see this, either through this early, rejection and close below the 6 with the crossover on the next bar, either one of those is perfectly good. And at that point, you can see we're in for the really long trade. We're in a situation where 43 pips into the close in the afternoon on the pound US, and that's a great day's work for anybody. So let me just show you quickly as we look through this, and then we'll get back to some entries quickly, and then we'll come back and redo this video as a follow-up video to show more entries on different pairs, but we'll stop after we get involved now with showing you how to change these indicators and how to use a particular feature of Metatrader to do that. Let's go back for a moment to the 30-minute chart, and you can notice here that we still have everything on board. Now what you do in this particular case is simply to right-click and go to your indicator list. Now the one thing that we would like to get rid of right away on the higher time frames is the Ichimoku cloud. You can see that it's here, so we left-click it, we go to Edit. Now we come to this Visualization tab, not the Color tab. Notice how we did the Ichimoku cloud and got rid of the moving averages. It's outside the cloud. We just left these two clicked. We have none for color in the other area. But let's go to visualization. Right now, it will print in all time frames, whether it's an hour-long chart for all the way up to a monthly chart. Well, let's get that down to just being the 1 and the 5. And in this particular case, we do this. Okay, and then we close. Now, notice it's disappeared. Okay, now the same thing, maybe you'd like to use the multiple moving averages, the 25 through the 50 in this particular area. That would be fine if you want to keep them. But if you'd like to wait until such time and maybe get in a little quicker than this particular configuration on the 30 will let you, well, what we could do is the same thing. We right-click on the chart, we go to Indicators. Now in this case, we're going to have to do this several times because I put these all in as individual moving averages. Let me show you. This is the 25, and so what we want to do is go to Visualization and simply click on all time frames and choose once again our minute 1 and minute 25. Now I'm not going to take a lot more time in this video doing that 50 times over. Let's just close that, and I'll show you that I already created a video template with those changes in place, and I've called it Super GMMA 2 right here. So let's click on that and see, you'll see instantly that what we are now back to is that original 6 and 12 EMA. And you'll notice here that we're in a situation now where we have This is our downward thrust on the 30-minute chart. And what I would suggest to you, let's open it up so it's clear. I would suggest to you this is today's move. Here was our move from the other day over in this particular area. Tuesday is right here. You can see this was the one we were just charting. And I'll show you that it had great capability again today, which is Friday triple witching, the 17th of September. But in any event, here we were. Now what we can do, having changed all of those moving averages to only show up on the 5 and the 1 minute charts, let's click now to see the 5 minute. And then what you can do also to speed up the process, we put that line in place. So right click, now go to Objects. Now find your vertical line, click on it and say Show, and you automatically get moved over where you can see it right here. And notice now we're taken back to that same 5-minute chart that I was showing you before, with only this time our template, which we can go back up here, you see, to save the template and name it our Super GMMA 2. That is one of the issues that you can do in Metatrader. That's a very handy feature if you'd like to have your indicators only appear on certain time frames. Okay, now it's running a little long, but before I show you one last trade entry opportunity that occurred today on Friday, let's quickly go back and review some of the other things that we notice about this particular template here. With our multiple moving averages headed downward, so we know that we have this cushion that's preventing us from moving higher, and we, or at least trying to. And number two, our Ichimoku cloud has rolled over here. You can see that this change has taken place with our green line below the red line and the cloud here headed downwards. Notice also that it is at this time on the 5-minute chart when we have our failure here and our rollover in blue medallion. It's the first or second red bar, so we know we're good to go on the downward thrust here. And also notice that we have fallen down below the 45 on our RSI. Now, do you need all of these duplicated and in double, triple, quadruple confirming things? No. You can certainly pick and choose what you'd like, but I did want to show you that this is something that as you move from higher time frames to lower time frames to enhance your reward opportunities, that you can customize to meet your own needs. One last thing I would just like to show you here is that our stop loss level, unlike before when it was 17 pips or something, in this particular case, while we're back up here to 17 or 18 pips up to the Ichimoku cloud, we're only at 6 or 7 pips if we wanted to put our stop loss right between the two of these indicators. And in fact, depending upon your risk tolerance, you could put it right here for sure. We've come down. We don't want to take out this again, and off we go and down we go. Okay, now one last quick trade opportunity to show you that occurred today, which is Friday. I'm going to go back to the 30-minute chart and move us over. Now here we are on Friday, triple witching. Obviously the market wasn't quite sure what to do here in the early hours of the Asian session, kind of waiting for the U.S. equities market to give them some go-ahead and some ideas. And so here we had a situation where we had the downward thrust, and this is at approximately 12 o'clock, which is a couple hours after the 10 o'clock open of the London exchange. And then we come back up, and sure enough here at 1500 hours, which is 8 o'clock in the morning U.S. time, we had a false move, a false breakout to the north, a quick reversal, and then another downward move. And this particular situation here, this what I call reverse switcheroo, this occurs, and the closer they are together, the more pronounced the rejection is, you can see. This didn't get quite below the 6. You wait until you get to this situation on the 30-minute chart, which is where you can watch. You could send yourself texts to your phone or emails to yourself so that you don't have to be watching constantly on the 30-minute chart. You can give yourself some breathing room from the screen. You put your line right here next to that after you get that announcement. You've got some time to get back to your computer and see what's going on. We drop down to the 5-minute chart. And then once again, right click, objects list, vertical line, show. And here we are, and notice that we've got a drop out of the cloud, just like we talked about before. We've got a little pullback. We're definitely down on the 6 and 12, and we have this wonderful move to the downside. And we respect the 6 all the way down until we get to this area here. And even at this level, we haven't been able to get back up through the multiple moving averages, and it looks like we're just going to drift lower throughout the rest of the session. Okay, I hope that's helpful, hints and tips. If you have any comments or questions, please leave them in the description below the video. We'll be happy to try to get back to you. Once again, don't hesitate to sign up for our indicators. If they'll be helpful to you, send us an email. And if you've lost a previous invitation to Dropbox, shoot another one and we'll get you in, no problem. Thanks a lot for watching. Don't hesitate to subscribe if this is helpful, and hit the bell if you'd like to be alerted for our next material, which will be coming out shortly as we discuss this indicator even in more depth with other pairs like the US Canadian or the US JPY. Thanks for watching.